Why is issuer credit risk a key concern for commodity ETNs? Have you ever wondered why issuer credit risk is such a big deal when it comes to commodity exchange-traded notes? Let's break it down in a straightforward way. Commodity exchange-traded notes are unsecured debt instruments issued by financial institutions, like banks. When you invest in a commodity exchange-traded note, you are essentially lending money to the issuer. In return, the issuer promises to pay you returns that are linked to the performance of a commodity index or benchmark. Now, here's where it gets interesting. Unlike exchange-traded funds that actually hold the underlying assets, commodity exchange-traded notes do not own the commodities or futures contracts. Their value is tied directly to the issuer's ability to meet its payment obligations. If the issuer runs into financial trouble or defaults, you could lose all or part of your investment. This can happen even if the underlying commodity prices are on the rise. Think of it like holding an unsecured bond. The repayment depends solely on the issuer's financial health. If the issuer's creditworthiness declines, the value of your commodity exchange-traded note can drop, even if the commodity itself is performing well. This adds a layer of risk that investors need to be aware of. Additionally, there is something called call risk. This is where the issuer can redeem the commodity exchange-traded note before its maturity date. If this happens, it might be at a time that is not favorable for you as an investor. There's also liquidity risk to consider. The issuer controls how many new commodity exchange-traded notes are created, which can impact supply and trading spreads. For anyone looking to invest in commodities, understanding issuer credit risk is essential. It introduces a risk factor that goes beyond just the fluctuations in commodity prices. While commodity exchange-traded notes offer a convenient way to gain exposure to commodities without dealing with futures contracts directly, you must assess the financial strength and credit rating of the issuer. This evaluation is key to managing the risk of default and determining if commodity exchange-traded notes are a suitable investment choice for you.